Hello, chart watchers, and welcome to this Monday, December 11th, Market Watchers Live show with Aaron Swinlin and Tom Bowley. I'm your host, Tom Bowley. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be archived on our site until the next show begins. So you'll have roughly 24 hours. If you'd like to review an older show, you can now find those at our YouTube channel or on Facebook. During today's show, please feel free to submit ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, we'll select stock symbols from your requests, and we'll use those in the 10 in 10 segment at 12:50 Eastern Standard Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live now airs 5 days a week, Monday through Friday, from noon to 1:30 p.m. Eastern Standard Time. If you want to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is at Market Watchers Live. That's at MKT Watchers Live. As you leave today's show, we'd love to hear your feedback. In the lower right portion of your screen, you'll see a How'd We Do section with a link to a very brief one-question survey. Let us know what you think of Market Watchers Live, and feel free to provide us suggestions on how we can improve the show. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. A couple of quick announcements before we get into the show. I'll be out the next couple of days for personal reasons, but the good news is Greg Schnell will be back in here tomorrow with Aaron. And special guest Arthur Hill will be joining the show on Wednesday, and also will join Aaron and bring you up to date on everything going on in the markets. This Friday, I'll do a segment on price support and resistance. So if you'd like to get my take on some of the key price support levels, price resistance levels, things that you need to be watching when you're looking at the charts, tune in on Friday, and I'll be happy to go over all of that. And with that, I'll bring in my lovely co-host, Aaron. How are you doing this morning, Aaron?
I'm doing quite well, thank you. And lots of people asking about the fires here. I'm safe. It's farther away from me. I'm in Riverside County, and it's pretty much LA and San Bernardino Mountains. So my brother was almost evacuated, but things have calmed down. So far, so good. So we're certainly sending our prayers to those affected.
Yeah, they were pretty nasty. I know the winds were high out on the West Coast, and that certainly has made it more difficult to contain the fires. But yeah, I agree. Prayers out to everyone on the West Coast. Hopefully we'll get all these fires under control and out sooner rather than later.
Absolutely.
I know we got a lot on the agenda, so I'm going to let you jump right into the agenda and give us that first market update.
Absolutely. And yes, it is full as always. We'll have market updates. I'll be giving you one shortly, and we'll recheck the market at about 1 p.m. We have our Monday setups to start the show. You'll be able to see what we have in store for you and what looks hot coming up. We have John Hopkins joining us later for an earnings spotlight. And of course, the 10 and 10 to 1, ever popular. And the first symbol that Tom is going to be looking at is Scanacorp, SCG. So if you want to go take a peek at that and take your own notes before we have the 10 and 10, go for it. I'll be giving you a DecisionPoint report thereafter. And we'll finish up with mailbag and wrap it up. So send your questions in, and we'll see if we can't get to them by the end of the show. And before we get started, I did want to show you the Wall Street sentiment results. So I'm going to take you over there real quick because it was an extraordinarily interesting chart, in my opinion. So I will find that for you right here. And Wall Street sentiment. Yeah, when I got the results, they come in on Sunday. And this is the poll that we take, Tom and I, whether we're bulls or bears. And as you can see, what I found to be very interesting, in fact, I need to update this. There we go. All right. What's really interesting is check out this the bull-bear ratio right now, up at 4. Definitely more bulls right now than bears looking out forward future for this week. So this is a very short-term survey, and currently we're seeing a predominance of the bulls right now. Typically bullish sentiment.
I was just going to say, I wonder if we could go back and look. I wonder if that's something that typically happens in December. because of
Oh,
the holidays. I wonder if folks just start to grow a
yeah,
little bit more bullish because
well,
of that.
sure. Let's move this out just another 2 months here and let's see.
It's just a random
All
thought.
right. Yep. No, it's you can see a predominance of bears back then. The interesting thing is with this survey is they, I guess I can say we, typically come through okay because it is such a short-term survey and we're only looking at what's going to happen in the coming week. Just because we have a predominance of bulls right now, they're looking only ahead to Friday and how the market will finish. So right now, definitely a predominance of bulls. We'll see if that comes to fruition by the end of the day. So next, let's go ahead and start that market update right now. And here we go. Let's first take a look at our headlines here and our predefined alerts. I found it very interesting right now. We're seeing the materials sector bullish percent index. It crossed above 80. We'll go ahead and take a look at that chart, as well as the Russell 2000, which crossed above 1525 earlier this morning. So let's just take a quick peek at the Russell 2000, and then we'll look at the materials chart. And as you can see, at this point, the Russell 2000, yes, it did get up and above, but we can see right now the PMO is about to give us, in fact, it has so far today now given us a sell signal on Russell 2000. So despite a pretty good morning, we're still seeing some problems here. And you can see a symmetrical triangle building. Typically, you're going to see those resolve to the upside. We'll have to see if that continues, but I definitely don't like the look of this PMO sell signal. The other one, remember, was XLB. And here we go with this sector. Remember the BPI had moved above zero for the materials index. And I'm also seeing another symmetrical triangle here in the making, I would say. We did get a PMO buy signal, although the momentum has been rather flat since then. But I would be looking for a breakout here out of that symmetrical triangle being a continuation pattern. We're probably going to see a break to the upside. Now I'm going to take you quickly to our candle glance and we will get started with the show after that. And here you go. These are all predefined setup for us. You can get to it just as I showed you. Right now, we're seeing all the markets are up currently. I know there was some discussion about the terror attack, small, I guess, what did they call it, amateur, and didn't seem to affect the markets much at all. As you can see, Dow is up, S&P 500 currently reading 2656.45. Look at the NASDAQ, though. Nice breakout we're seeing right now. Technology certainly trying to come back to life. Russell 2000, I already showed you that chart, but if you look at the 2-day, we might be looking at a double bottom currently. And with that, we have Wilshire 5000 also positive. Treasury yields are down currently, as is the dollar, forming a bit of a reverse flag here. Doesn't look too good there. Commodities are up, likely because we're seeing such a great day right now on oil, in particular USO, which is now reading at 1159. GLD gold is down. Interesting, of course, every time we see the dollar down, we expect gold to move up. So that dichotomy is pretty interesting this morning. Seeing the VIX up just slightly, but we're still having a reading below 10, which suggests that we still have some bullish behavior going on out there. And with that, I'm going to complete that first market update, and let's go ahead and get into some Monday setups.
All right. Well, first, before we get into the setups, let me go ahead and just bring up a couple of things. There were no economic reports out today. So pull up the 10-year Treasury yield. But you can see not really a whole lot of activity. We gapped down a little bit on the 10-year Treasury yield this morning. Got down as low as 235. Now we're sitting about 237. So just, not a whole lot. But again, there wasn't a whole lot of news. Tomorrow begins another FOMC meeting. We will get the policy statement from this meeting on Wednesday at about 2 p.m. So I think most market participants would agree we're going to get that 25-point or basis point hike. And so there's probably a little bit of a foregone conclusion at this point, although I'm going to be very curious to see what they say as far as their balance sheet and unwinding their balance sheet and selling treasuries, because we all know that selling treasuries makes the yield go higher. There's always that inverse relationship. And if the market knows that the Fed is going to be selling, that may encourage others to sell as well. And that's one of the reasons why I think that we could still see a rising 10-year Treasury yield into 2018. And of course, as that rises, that tends to help both the financials and maybe to a little lesser degree the industrials, but certainly many of the financials, particularly banks and life insurance companies that see their profits rise as these yields move up. Uh, from a banking perspective, having audited banks, I know that their net interest margin is obviously their key driver. And when you're seeing the yields move up on the 10-year Treasury, we tend to see a rapid increase in the net interest margin line item on banks. And so that can really drive prices there. Let's pull up the XLE. Aaron was mentioning energy having a really good day. Technically, we're getting close to a breakout. You can see after moving higher, this was the first move up that we saw over about a 6-week period from the middle of August through the end of September. We did have that one initial pullback, which came down and held around 66.5 and then broke out to another high. So that to me means that this low right here is pretty important. And notice that our prior moves to the downside have held at that level. And now we are trying to make another push for a breakout. A breakout above 70.5, especially 71, would be very bullish on the XLE. So that's something to keep an eye out for. Back during earnings season, and we'll have John Hopkins from Earnings Beats in here in just a little bit, but back during earnings season, it was kind of normal to have 2, 3, 4, 500 companies reporting earnings in one day. This week, I added them up. There's 28 earnings reports due out all week, and most of them very small companies. The only 3 that I saw that really maybe are worth mentioning would be Oracle, which is ticker symbol ORCL. They're expecting 68 cents on their bottom line, and you can see the movement now starting to rise here as we head toward their earnings announcement. So it could be that a lot of folks starting to get a little bit more bullish about Oracle's report coming up Thursday after the bell. Adobe Systems also reports Thursday after the bell. $1.15 is their expectation. And you can see that with their last gap up and the pullback to test the top of this gap support, now we're starting to rise. And this will be another one to be interesting to see how we move into earnings. I suspect that we're going to see a good report on Adobe, but it is within software. And of course, many of the technology companies had been struggling until recently, trying to get some of those gains, or excuse me, some of those losses back in recent sessions. But Adobe will be an interesting report on Thursday after the bell. And then Costco, COST, expecting earnings of $1.35. And based on this move over the last 2 months, I suspect we're going to see a really strong report out of Costco. The question is whether or not we've already priced it in, and that's what the reaction will tell us on Friday morning after Costco's Thursday evening report. So those are 3 big companies, to keep an eye on as we go into the latter part of the week. Really, the only big earnings news that we have out all week are those 3 companies, and they all are out Thursday evening. So we're not going to get a lot of earnings news over these next couple of days. A couple of other stocks maybe to talk about. Of course, cryptocurrency stocks are really hot in the news. And Riot blockchain, RIOT, you can see another big gap up today. This triangle broke. I think we had talked about this. It looked like it was squeezing into a triangle. Well, it is broken. And look at the volume today. Already 8.6 million shares. Now, it hasn't gone much since the open. It opened at 1906, and it's sitting at 1895. But you can see the volatility in this stock. This is not a trade for most traders because of the volatility. But for those of you who love volatility, you certainly are getting a handful with Riot over the past, I'd say the last 3 weeks, but really going back to the end of September. A couple of other stocks to kind of watch in this space as well. Mara, M-A-R-A. This is Marathon Patent Group. Also moving higher a little bit, 44 cents today, or almost 10%. And you can see the volume starting to pick up here as well. 4 million shares. Nowhere near what we saw a couple of weeks ago on these huge moves to the upside. But notice at the top, that black candle, that is usually the kiss of death, at least in the near term. And on this kind of volume after this move to the upside, it certainly has served as such on this stock. One level of resistance I would watch real closely, though, is right about this 550 area. You can see all of these filled candles. When we gap up to about 550, we failed to hold. I think a break above 550 would be very bullish in the near term. But once again, this is an incredibly volatile stock. So be careful. Maybe one that's got a little bit less volatility would be CBOE, but you can see the huge move up here. CBOE looks really good technically, but it is incredibly overbought and has been mostly overbought over the past few months. So this one's got a little bit of risk in it, but nothing compared to the two I just showed you. A couple of stocks that were upgraded this morning. First Solar, which has been on an absolute tear. You can see after the gap up following sideways consolidation for about 3 months, we gapped up on very heavy volume in October, and that began the next run to the upside. And you can see over the past 4 or 5 trading days, look at the volume that's been coming in, driving the stock to the upside. I would be waiting on a pullback. You've got great price support now that resides at about 62.5, and that rising 20-day moving average also at 62.41. I know you might look at it and say, well, this thing's not going to go back $7. But if you take a look back after the huge breakout that we had at the end of October, look at this candle here where it went from 60 down to about 53 in one trading day. So it certainly is a possibility. And that's the problem with chasing these stocks, is that they can be very painful when you see a day like that. So I would be waiting for something like that, maybe a test of that rising 20-day to get involved. One downgrade this morning, and we're going to get into our setups. That was PACCAR, PCAR. I think it was Morgan Stanley that downgraded them. I'm not sure. We got the downgrade, but it's actually come up off that earlier low, and it is trying to get past this reaction high at $72. Looks a little bit like an uptrend and an inverse head and shoulders. Left shoulder, neckline, head, right side of the neckline, right at 72, and then right now pulling back. I'd be watching that rising 20-day moving average to the downside, and a heavy volume breakout above 72 would measure up to about 77.5, which is 5.5 points above the breakout level. And that measurement is determined by the depth from the neckline down to the inverse head. So that is roughly about 5.5 points. So that's what you would tack on. But it does require volume to confirm that pattern and that breakout. So that's what I'd be looking for there. And with that, Aaron, I know we got a bunch of Monday setups. I'm going to let you go ahead and take it away. I think you had MetLife last week.
Oh, yes. Let's see how we did.
And I don't have the dollar amounts. I'm sorry. I usually keep track of them.
I do.
I think it was pretty close. I mean, just looking at this chart, I think it was pretty close to where it is right now.
Yeah. So MetLife, I had at 53.87.
Okay, 53.84. So basically flat.
Okay.
And it's still, off of this uptrend. Looks like it's still on a bull flag to me.
Yeah, we'll see.
And then
yours was Click, KALIC, at 23.70.
All right, 24.18. So what's that? 2% maybe.
Winner, chicken dinner.
All right, so chicken dinner's on you this week.
That's right. Good job.
Hey, we've had some pretty good ones.
I think so. We really haven't had any just horrible ones. I think I'm happy with that.
Well, Greg tried to saddle me with a horrible one.
That's true.
He did. He tried. But we got, we're only as good as our last picks. So we're going to start a new one, a new little competition. So what do you have for this week?
All right. And admittedly, I really haven't picked one. So I'm going to go through them and decide which one to go with. I have some thoughts, but I ran my scan, and actually the one I run on the S&P 500 only returned Rockwell Collins. So I decided to run the scan, but I opened up the universe that it scanned, and I ended up getting these others to come through. So I thought that was pretty interesting, just to see that, at this point the markets are up, but I'm not seeing a whole lot of positive momentum out there, or else they would have shown up on my scan, because, the PMO has to be rising for 3 days in order to come up on my scan. So the fact that there were so few, I think, speaks to the fact that, we are looking at, we had a pullback, things are moving slowly, and, momentum has not picked up for a lot of these. But interesting to note, 2 financials came through and 2 healthcare. So I thought that was interesting. I know we've been looking at financials and the treasury yields and it moving toward the positive side, probably a little more quickly than some of the others. So anyway, let me get started. And I thought, how funny. I didn't even know there was a PMO symbol out there.
So ironic. What's that? What's the singer that sings that song? Isn't it ironic?
Yes, exactly. Alanis Morissette. Boy, digging that one out.
You have the music going in the background on this one.
Exactly. I have to say on the patio, I did get a black fly in my Chardonnay and I had to tweet it. It was too funny. So with that, let me go ahead and go into these setups. I thought the PMO looked very interesting, mainly because we don't have that PMO crossover buy signal just yet. And there is a pennant and flag developing here. You can see it a bit better in the thumbnail. And, if that executes, if we get a breakout above this declining tops right here on this pennant, then we could be looking at, a move that is the height of this flagpole. So that one's looking pretty good. And I think I've been sort of leaning toward it, not just because its name is PMO, but because I do like that setup. It would, the only issue I have is it needs that breakout. And that's what would, of course, give us that move. That flagpole move would require a breakout above this overhead resistance. However, I do want to show you quickly the weekly chart, which is why I think this is going to be my pick. So, we may be heading toward this area of resistance here, but there's still some room when I look at the intraday high or intra-week highs that we saw back in 2016. So there's still some upside potential here before we hit longer term support. So I think this is the one I'm going to end up going with at $12.53. But let's go ahead. I want to show you some of the others that did come up and why I picked them or didn't pick them. This is Rockwell Collins. Remember, this was the only one that came up in my S&P 500 scan. The one that you can get to, go to the Market Watchers Live blog, recap at the very bottom of every single article is a link to my article regarding my S&P 500 scan. So that's where you might want to go to check that out. Anyway, so Rockwell Collins, it's been in this trading range. I think, you've got potential. It's going to get to the top of the range again. But I think this one is too late of an entry. I would have been looking more over here when it broke above that 20-day EMA. And now we've already had a kind of a bit of longer rally here. So I didn't pick this one. And that's why. Let's move on. Visa. This was a close second. And one of the main reasons I did not select it is it is starting to hit the resistance at all-time highs. And so, I didn't want to take a chance on that one, but it is in the financial space. So, we'll probably get that breakout, but for the sake of this exercise, getting a Monday setup where I have 1 week to see where it goes, I didn't think that one was that good, but you might want to put that in a watch list. First American Corp, another financial one, right now in the process of breaking out above two areas of overhead resistance, not only the resistance at that November high, which it's already broken through. We're not quite closing above it just yet, but it's also penetrated the top of this rising trend channel. So this one looks pretty good as far as the financial space as well. So, but I didn't pick it. I picked PMO. All right. Excuse me. I'm going to take a drink of water.
Yeah, it's interesting, too. I noticed that on the PMO, of course, we'll get back to that one in a little bit, but the stock PMO, I don't know if it bothers you at all when you see a stock that's consolidating and going back and forth, and you're looking at a momentum oscillator like the PMO or like the MACD or something like that, where you constantly are getting the crossovers back and forth. I mean, you can kind of see it line, how
this
it's going.
One was particularly bad.
Yeah, just does that bother you at all, or do you still follow?
Well, honestly, I'm seeing these bottoms still rising slightly, and I really like the formation, and I think that would I see the point, but again, for the sake of the exercise, I think I can get a pretty good move up to that overhead resistance level at a minimum. So, and with a low price stock like this, like I said, for the purposes of the exercise, I think it looks pretty good. I'm not going to go buy it today. So just FYI, folks, so not going to happen. But I think there is some potential there. So I do always want to share stocks where I think there is some potential. So let's go back to our next one here. Halo, I showed you with that nice breakout nearing a PMO buy signal. Looks like it's out of this particular trading range. That could be very interesting. Hubs. And I need
Actually, I
to
think,
use.
didn't you have Halo once
Did
before?
I? Yeah, it might have come up from before. I'm not really sure, but
Because
yeah.
remember, didn't you write? I think you wrote an article about being a devil, or
Oh, yeah. I think I did. So, and I think it came in at this buy signal, but you can go to the DP blog and check out what I put in there. So,
it's work.
HubSpot. Hmm?
I say it's working. It actually, you got a breakout on that on
I
Halo.
Yeah, I did. It just took a little bit longer than a week. So again, this is why we need to always caveat these with this is for the sake of the exercise as to a really short-term trade that will hopefully do well within the week. I like this one because I think it will go up here to overhead resistance. You've got a double bottom here after this decline. I think that looks pretty good. You got the PMO buy signal here. One of the things that I didn't like was this drop off in volume after we got the big move up. So that was one of the reasons I didn't pick HubSpot. Med Space Holdings looks very similar, but we've got two areas of overhead resistance to deal with here. There is a bearish confirmation because we've got PMO bottoms that are declining and the price bottoms as well. So not liking this. One good thing is we had a double top here after this long rally and it did not execute. And so whenever I see a bearish pattern with a bullish conclusion, I find that to be especially bullish. But I would beware given that bearish confirmation. All right, and I think that's it. Go right ahead.
So PMO 1253.
Yes.
I think that is really cool that you have a stock with a ticker symbol PMO. And I love
that.
And I looked because if there was one out there, I was going to go with MACD this week just for the sake of going with MACD. But there is no MACD. I think I have to look and see. Is there a PPO?
I was just gonna look.
Nope. All right. See, now that's how sometimes you pick your football teams, by colors. Here we're picking stocks by ticker symbol. Not no I'm
familiarity.
Yeah. Okay, so let's take a look at some setups that I had for this week. I've got mine picked out for this week. But first, let me bring you over, and I'm going to go into blogs because every Monday you can go into my Trading Places blog, with the exception of the last couple of weeks. I think one was holiday, and I'm not quite sure why I never updated my setups for last week. But what I typically do on Mondays is I have a section that only shows up on my Monday blog, which is Monday Setups. And here, what I did is I actually had 9 potential trade setups, and you can click through the article. And I'll go there in just a second. But anytime you go into my blog, you can see here this little link. Click here to see my live chart list. That will bring up the last 30 setups. So this week's 9, but if you go back, there'll be some others in the past that you can take a look at. But again, I'm going to go into the actual article. And within the article, you can see the setup by clicking there. So this is not my setup. This is the first one listed, but this is not going to be my setup for the week. ESIO, again, big volume, moving higher. I think looked really good. But like many stocks, especially technology stocks, the stock went through a pretty good pullback. You can see, look how overbought. Talk about some blue mountains. I don't know if I've seen that many blue mountains on a stock going back over the last 4 months, but this one has been overbought for a long time and finally got its first pullback. And you can see the RSI is firmly down in the low 40s. And that normally during an uptrend is a pretty decent time. I think also I didn't annotate with a trend line, but I think if you come up here with a trend line, you're probably pretty close to hitting a trend line support as well. I just view this entire area here. Now it is a little bit of a wide range, 18 to 21. Somebody who's a little bit more, maybe risk averse, who's interested in getting in might get into a portion here. And if it does make its way down to 18, maybe a second entry would be something that maybe you could consider. But this is a stock that easily, in my opinion, especially if the market picks back up again, This is a stock that easily could make its way back to 27 or so, which was the high in November. And from a current price in the 20 and a half range, the reward obviously looks pretty good here. So I like this stock, but I'm going to go with GNRC. And so I'm going to pull this one up. This will be my pick for the week. Great accumulation back in August and September. Even in October, the volume here, if you look back to prior months, this was pretty good volume as it kept going higher. But we did finally run into a negative divergence and then a bearish engulfing candle on very heavy volume. Basically, that's the market's version of saying enough is enough. And the uptrend that had been in play from $36 to $54 in about 2.5 months, 50% increase. It was just too much over too short of a period. So I think what we have here is maybe a cup. And I think it's starting to round here toward the bottom of this area. I'm going to go ahead and take GNRC right here at the current price, $49.29. So let me
Okay.
put that down. GNRC at $49.29. And so that will be, and then you've got PMO at 1253. So those are our two picks of this week. But I just think that this sideways consolidation volume's kind of, I don't know, just been moderating. And it's really been between this 48 and 50 area mostly now for almost a month, maybe even a little over a month. So I think that an increase in volume and a move above 42, or excuse me, above 50 on some heavy volume, get that volume confirmation, I think will be the first signal to send the stock back up to 54. To the downside, these are a couple of areas. If you wanted to try to get a little bit better reward to risk, you certainly could be looking around 48, or maybe even possibly a second entry if it were to get down to the bottom of gap support, closer to 46. That's the best reward to risk entry, in my opinion. I just don't know if it's going to go back down there. I actually bought into GNRC today, so full disclosure, I do own this stock. And also the first one I just showed you, ESIO. I also own that one as well. And then a few others on this list. Let me just go through these real quick. IMAX actually having a pretty nice day today, bouncing off of trendline support and its 50-day moving average. Got really close to price support recently. It's in this general uptrend. Nice volume on the huge move before. So I think, and actually volume, not too bad. Not even halfway point of the day. It's over 250,000. So it might be on pace for 500. I don't know. Maybe it's not that great a volume. But it has broken. Looks like it's breaking this downtrend line, which I think is good. A break above the 20-day moving average would be even more bullish for IMAX. IDTI, you can see after a huge move up, very heavy volume, end of October, early November. Got way ahead of itself, was very overbought. You can check out a number of these that I've pulled up have RSIs down in the 40s. And that normally during an uptrend is a pretty good time to consider entry from a reward to risk standpoint. So I think this area right in here where it's been trading for the last couple of weeks is really good support on IDTI. So I continue to like this one. Intel, after moving up steadily on very heavy volume, again, end of October, early November, we have made this move all the way back down to test the top of gap support. MACD centerline test, 50-day test, gap support test, and an RSI 40 test. So Intel up about 0.5% today. This isn't a bad area, perhaps, for Intel to make a run. And just a few more here. KRA, again, you can see a lot of these gap support, 50-day moving average supports, MACD centerline, RSI in the 40s. I can go on and on, but these are some of the ways I like to trade. I like to see some of that bullishness come out of the stock for a period of time. I think it enables market makers to get long in positions before another run to the upside. Stryker, very, very huge move here with big volume. And you can see back at the end of November, another nice solid hollow candle with big volume. So made it all the way back down to the area that it broke out from, just over 150. And it's got gap support just above 148. So this is the best area. You can see we touched the top end of it back on Thursday and just hovering up very little today, just a fractional gain. And the last two, MMC, I like this volume coming back in on a breakout above the prior high. You can see here, higher prices, lower MACD, and we went back down to the 50-day moving average, centerline support. Kind of went sideways for a bit, but also here, look at the volume on this move to the upside. So I think this pullback down to the 20-day moving average is interesting. And the last one is PAG. I actually own this one. PAG came down and tested the 20-day on Friday and that was enough for me. I like this overall pattern to the upside. I like the recent breakout volume coming back in a little bit on that breakout. And then the pullback to the 20 was getting really close to trend line support. And after a center line test, I actually, am looking at this as accelerating momentum again. And then we were testing the rising 20-day. So I'd like to see that hold as we go forward. But I'll probably look at these bottoms down here just under 48, maybe closer to 47 actually, as key short-term price support. So those were my setups. And I am going with, to recap, I am going with GNRC at 49.29, and Aaron's pick for this week is PMO, which is kind of ironic, at 12.53. So those are our two picks for this week. All right, with that, let me go ahead and move over to the earnings spotlight. This earnings spotlight is brought to you by earningsbeats.com. Earningsbeats.com is a trading service designed to set up high reward to low risk trades. This strategy has resulted in a 2017 risk adjusted return that has outperformed the benchmark S&P 500 fivefold. Earningsbeats.com only trades companies that have beaten Wall Street estimates as to quarterly revenues and earnings, and they will teach you how to spot great trading opportunities that focus on both strong fundamentals and strong technical charts. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com, better timing, better trades. Mr. Hopkins, are you with us today? Uh-oh. Mr. Hopkins, is he in the house?
Hey, Tom. I'm here.
Hey there, how you doing?
I'm doing good. How are you?
I am doing pretty good. It's a Monday, start of a new trading week. We're getting close to the holidays.
Mm-hmm.
Are you ready for the holidays?
You know what? Better than usual.
Okay.
I was talking to my wife when I was dating her back in high school. My basic, operating mode around Christmas was heading out to the drugstore about 8 o'clock Christmas Eve, to grab something. So I've gotten way better than that.
Yeah. Well, I think the mall is used to seeing me around December 24th. So they're not looking for me yet.
The malls that continue to exist, you mean?
Exactly.
Yeah.
They exist because of people like me.
I hear you.
Oh, we got earnings season. I don't know if you were listening earlier, but you remember it wasn't that long ago, and it won't be too long in the future where we'll be having hundreds of companies reporting every day. But
oh yeah,
not the case right now. We got a total of 28 companies I think that are reporting this week.
Yep.
And only 3 really that matter: Oracle, Adobe Systems, and Costco. Other than that, well, I guess others might matter if you own them. But as far as market moving type of earnings reports, we really don't see a whole lot. So I guess this is the time of the year where you just kind of sit back and just, probably not a whole lot of shifting in your chart list, because I know there isn't a whole lot in mine. So what do you do? Just sit back and look for opportunities?
Well, let me tell you something. Speaking of chart list, what a powerful tool that is offered by stockcharts.com. And it turns out, Tom, that we've got a little over 275 stocks that reported earnings over the past month or so. And what we do is we scan the market, we find stocks that beat earnings, they end up in our chart list. And then it's like going in a candy store because you can set your parameters, what you're looking for, stocks moving to their 50-day moving averages, strong MACD, strong volume, and you can basically set these parameters and let the system do its work for you and give you a list of contenders for potential high reward to risk opportunities. So even though earnings itself, the earnings, has slowed down, we've got just a tremendous number of, if anything, to be honest with you, I have to be, very selective in terms of, which trade alerts we send to our members, because, you can have too many. What we found, Tom, if you're trading stocks and you're trading, dozens of stocks, you better be darn good, or you better have something electronic. I have found that anytime you can, maybe get involved in 6 to 8 stocks at a time, sort of a max, that and you spread your capital around, it can make like a really big difference. So, but what I want to do is I want to talk about a couple of stocks today and I have a tremendous case study on discipline I want to talk about in just a minute. But I first want to talk about our chart of the week that came out early this morning before the market opened. And this is NetTees, NTES.
Okay.
This was on our chart list. And you can see, look at that tremendous volume, a gap up on earnings. You can see the big volume bar.
Mm-hmm.
That was earnings. I can't get involved there. I got to wait for it to pull back. Waited. It pulled back and, actually dipped below the 20, and I still waited to see if it recovered and got back over that 20-day. And I said, this would be a good time to get involved in this stock. People are going to like this stock. And you can see what it's done today. It's just exploded. And this is the whole idea here is you got to be patient, Tom. Wait for these to come back to you, and that's where you get your high reward to risk.
Yeah, this one, even though it went below the 20-day, you've got some pretty good gap support. The first gap up here was on pretty heavy volume. Of course, the second one was on even bigger volume, but these gap support levels are also pretty big. And NetTees came down close to the top of gap support here at 310. Got down maybe to a 311 or 312 before making this big reversal. But yeah, volume today also 1.1 million shares, and we're about the halfway point of the day. So it looks like it's going to be over 2 million shares at this pace.
It's pretty awesome.
Yeah, and that would be the heaviest volume since we saw these gap ups. So
yeah,
it looks pretty good.
By the way, you can get our chart of the week. It's free. If you go to earningsbeats.com, up at the top, you'll see a link. Two more stocks I want to talk about.
Okay.
I want to talk about IMAX. IMAX. Also a company on our chart list. And you can see it made a nice move, got it over the 200-day, then it started pulling back. I don't want to chase it up there. Got a little bit overbought. Mm-hmm. So I was patient to the point where I wanted to see it pull back to the 50-day. So we issued this as a trade alert last week at an initial price of $24.02 with a second entry of $23.45. Mm-hmm. And you can see, I think it pulled back to $23.40.
Oh,
so we got our second entry. And what I love about that, and by the way, the stop was any close below the 50. And our target price, $26.50. So you can see the stock moved down. It held the 50, got to our second entry level so we could cost average in. And even then, by having a second entry, your reward to risk goes up even higher because you're getting closer to that stop level. Mm-hmm. So I like the way that it held here, and I think it's going higher.
Yeah, this one looks pretty good. In fact, this was one of my setups. I don't know if you heard, but I was just doing my 9 setups.
No. Okay.
So this was one of them. It didn't make the final cut. But I tell you what, when I went through and did my setups for this week, when I ran my first initial cut kind of a thing, I probably had 30 stocks. Mm-hmm. I was trying to narrow it down because the chart list that I used for my trade setups that I put out on Mondays will only allow me to put 30 stocks in there. So it would completely have taken out all of the prior trade setups from prior weeks. Okay. So I wanted to try and narrow it down to about 10. And so I went through a couple of different cuts. I was looking at weekly charts. I was looking at 60-minute charts, and I was considering volume. And anyway, this was, IMAX was one of the 9 that made it on the final list. I don't own it. I did actually own it on the 20-day test back here in mid-November and I think traded up near 25 from what I recall. But the breakout occurred, and then we've gotten this second pullback. And I actually like this one on the 50-day or close to the 50-day. Yeah. With price support coming in there pretty close as well.
It's going to have a challenge when it gets up to the 200-day. Yeah. But if it clears at it, I think it's going back $26.50. All right, last one here. This is my case study.
Okay.
I got an article coming up in the Chart Watchers this weekend. Mm-hmm. I'm going to focus on discipline, taking profits and honoring stops. Okay. Now, people say, what's the big deal? What do you talk about taking profits? Of course, I take profits. But you know what? It's incredible, Tom, how people set price targets. They get giddy. They say, I'm going to hold on to this thing, longer. And before you know it, the profit disappears. Now, I want to pull up a stock that we did quite well on. It's called NFX. NFX.
Okay.
Take a look at NFX, okay? You can actually see their earnings early in November. They had a beautiful move, right, over the 200-day. It pulled back, and we got involved in the stock on November 20th.
Okay.
Okay. And we got involved at 29.38, and our price target was 31.30. You can see it exceeded the price target. Okay.
Yep.
Sent out an alert to our members saying, let's take our profits, and it continued to run another buck or so, which was beautiful. But I don't care about that. I know that when I set my targets and stops, I'm going to honor them. You can see what happened within just a couple of days.
Yeah, and as a
all
trader,
gone. Plus,
as a trader, I can tell you that for me, that is the most frustrating thing, to have a profit, even if it's only 5-6%. I shouldn't say only, because that's a nice return. But when you have a nice profit, but you don't quite meet your target, and then you're holding a stock and it comes back down and goes below where you had it originally, and then
yes,
walking away with a loss instead of capturing a profit. I mean, I agree. I mean, it's probably the most frustrating thing as a trader, because you had the profit, could have moved to cash, bagged the profit on the trade, and then had it available for another trade that's setting up with a much better reward to risk. Because that's
absolutely
you have to think about it. The reward to risk isn't the same throughout the entire trade. I mean, when you get your support, it's a solid reward to risk level. But as it makes its move back toward the recent price highs and price resistance, that reward to risk actually starts to change and starts to work.
Absolutely. Absolutely. So anyways, these are, I love to show these kinds of things. I can't stress enough how important it is, number one, to buy as close to support as you can. Then you can keep a tight stop. If it goes below the stop, you're out. Period. No questions asked. If it hits your price target, you're out. This is how you can actually make money, and how we've done so well at Earnings Beat. So anyways, last thing, I'll let you go. I appreciate you coming on here and sharing with listeners. We had a holiday special, and what makes it special, you can go to the website, by the way. Up at the top, there's a link that says holiday special. And what's special about it, it's $7, number one, to get involved. But it includes 3 weeks of membership, and it includes a webinar we have coming up, and it includes the chart list. The 275 stocks, we've already done the homework. So you don't even have to scan for them. You get your hands on the chart list, and then you can start maneuvering the way you like to. You can set your own parameters that you think are important in looking for trading. So this is my gift, for the listeners. I really appreciate being able to come on here, and I'm such a big fan of stock charts and the tools they have. So if somebody's interested, go to that holiday special, jump in, and I think you're going to like what you see.
All right. Well, I'm glad that you are offering this chart list, because I can't tell you how many times, because I always trade from my strong earnings chart list. I'm not going to say it's 100% of the time, but I would say in 2017,
okay,
probably north of 95% of my trades come out of that chart list. I run scans against it, and so I know exactly what you're talking about in terms of trying to weed it down and find candidates. Yeah. And I didn't want to send out the chart list because, for those of you who don't know, I actually, before I came on board here at Stock Charts, I worked with John at earningsbeats.com. And I know what the strategy is in using the strong earnings chart list, or as you call it, the candidate tracker.
Yes.
And so I didn't want to give out, the same chart list that you all have over at earningsbeats.com. So I think this is a great offer. And, at least anyone who wants to experience it can at least try it and see if that chart list helps in their trading. But appreciate on here, my friend.
Okay, listen, thanks again, and have a great week.
All right, you do the same. Bye. See you next Monday. Okay, there he goes, Mr. Hopkins. I tell you what, one other thing before we get into the 10 in 10, I'm just going to show you, because I ran a scan against this chart list, and my chart list, I don't know if it's exact the same as John's, but we use the same parameters to come up with charts, so my guess is it's pretty darn similar. But let me just pull up a couple of stocks. I've run a scan with stocks that have RSI readings just above 40. And so just to give you a few stocks that would have, the types of stocks that get pulled up. ADI, so here you can see higher prices, lower MACD, came back quite a bit. And now you can see that the RSI here is at 42. Just that, when you see a stock that's uptrending like this, if you take a look along at the RSI, you'll find that most bottoms come with an RSI somewhere around the 40 level or in the 40s, sometimes in the 50s. But when you get down to 40, an uptrending stock really should be getting close, if not at a support level. You also can see that we had a couple of key tops here around $63, $64, or excuse me, $83, $84. My eyes are going. $83 or $84. This close over here was around $84, it looks like. And then finally we broke up, and now we come back down and we test that level. So these are the types of stocks that if you run scans against a chart list, you could certainly come up with in your list. It also returned one of the stocks that I showed you in my earlier trade setups, ESIO. You can see that the RSI, while it was way overbought, now look where it is, 43. So anyway, just another way to look at the market. But with that, I know we got the 10 in 10. So Aaron, if you are ready to fire away, I am ready to go.
All right. Well, we said the first one would be SCG. So away you go.
All right, SCG. Couple things on this one. First of all, it's in an ugly downtrend, so I'm not a big fan. I think it also shows what to look for when you see these positive and negative divergences. So, for instance, here you can see was the prior price low, heavy volume selling. We made a little bit of attempt at a recovery, didn't even get back to the 20-day, and then right back down we went. Notice on this move to the upside, we had a positive divergence, but off of this uptrend, we went through the 20-day moving average, and then we failed. I'm just going to circle this because to me that is a shooting star candle, and that to me would have been a sign to get the heck out. But right there, nice shooting star candle off an uptrend. Sure enough, we went back down, put in a double bottom, and also still with that positive divergence. So here, maybe technically it wasn't a positive divergence because you're supposed to have a lower close, but you can see pretty much equal closes. And look at the MACD, so much higher. So in this case, we actually went right back to that 50-day moving average, and check out the MACD got almost all the way back to center line resistance. And now today on heavy volume, it's starting to turn back and roll over. So I don't like this chart. I think that we had a little bit of slowing momentum, and therefore we got a temporary reprieve back to the upside. But you can see one failure here around $44, $45. The second one occurred at the 50-day moving average on Friday. Now we're going back down. Look at the volume picking up. Personally, I don't like it.
All right. The next one I have for you is KO.
Right.
Knockout.
Or knockout.
We'll see if it is.
I like today's candlestick. We're at a major support level, or at least a major short-term support level. And again, as a reminder, I'll be going over price support and resistance this Friday. So if you're interested in coming in and taking a look, at least how I view price support and resistance, mark your calendar for Friday. But yeah, I like these tails coming down below $45 and then moving back up above. And again, as John and I were just talking about, the thing I like about it is you're right near price support. So if later today we see the stock moving back down to 44.75 and the volume starts picking up, I can get out with relatively minor losses. But if it holds and we make our way back up toward the top, which is what I would expect with an uptrending stock, then you've got about $1.75 to the upside to test the November high. So the reward to risk in Coca-Cola at this point, I think, is really good. But I would be leery if we get a close below $45 and the volume is heavy.
All right. Since we're talking interesting symbols, how about Riot? RIOT.
Yeah, we talked about Riot. I talked about that with the cryptocurrencies at the beginning of the show. But I do like the volume coming back in. I mean, this is one of those stocks, if you're going to buy it, you almost have to throw risk out, your risk reward out the window. And I hate to say that, but where in the heck are you going to set a stop on a stock like this? I think that for at least a brief period, it was in what I looked at as a bullish continuation pattern. You could maybe draw it like that, or maybe even draw it there. It's hard. That's the thing with trend lines. But I would say something along those lines kind of looked like we had this pennant, move up, which is kind of a symmetrical triangle kind of a formation. We broke out of it at the end of last week and then really took off today with very heavy volume. When I look at where my target would be, it's going to be at the recent high near 24. But if you said, where would you set a stop? Well, we're trading, and we've been trading mostly above that rising 20-day moving average. So I think here we could be looking down closer to about 13 and a half, approaching 14, but that is an incredibly wide range. I mean, if you're going to buy a stock at 19 and you're willing to let it go down to 13 and change, that's about a third of the, you could lose 30% on the stock or more on a quick pullback, and you can see how volatile the stock is. So for the majority of folks out there, I would not be trading the stock. I just don't think it fits most everyone's risk profile. But those who really like to gamble and like to put their money on the roulette wheel, this is one I think's got a shot for 24 in the near term. So for me, it's just too much risk. I wouldn't trade it.
All right. Let's see. The next one on our interesting symbols would be DNR. Is this one to do not resuscitate, or?
No, actually, I really like this one, and it was one of the stocks I eliminated. It was in my top 30 when I was looking at trade setups. It came out, it beat top line and bottom line estimates in its latest quarter. You can see that the downtrend has ended. I'm going to show you what I like about the stock first, and then I'll show you the beware sign that's on this one. But here's the trading range. After this move up, I think we're in a flag. So I think this looks very bullish. Flagpole, flag, a breakout above $1.95, especially $2 with increasing volume. That's what you want to see to the top side. To the bottom side, I think support comes in right around $1.60. I mean, you could see there's like a little bit of gap support, maybe at 155, 153, and then recent lows just below 160. So this area down here, and then of course you got the rising 50-day moving average coming up as well. All of that should provide support. So the closer it gets to the bottom of the range, the better I like it, just from a reward to risk standpoint. But ultimately, based on this move to the upside and this sideways consolidation, I'm expecting the next move to be to the upside. So that's the good news. And I'm going to go ahead and save this. But I do want to show you one other thing on this chart that you really have to be aware of, and that is the weekly chart. So the daily looks great, but then you look at the weekly, and this thing has just been a disaster, and we just got a 50-week moving average test from underneath. I would really want to hold this rising 20-week moving average, which right now is at $1.57. And if we go back to that daily chart, that $1.57 kind of is right in this range I talked about on the daily chart. So that's why if we go back down and we fail to hold this support level, you're also losing that rising 20-week moving average on the weekly chart. And if this thing truly is bottoming, that just shouldn't happen. So those are the two ways to look at this one. This, again, is probably for someone who is willing to take on much more risk.
All right. Let's see here. The next one I have for you is URA. And would you go long on URA?
I think maybe we looked at this one as well. Yeah, I'm seeing another breakout today on heavy volume. So I like it. If you like to play breakouts, you're certainly getting one here. I would just make sure that breakout confirms on the close, because otherwise you get a false breakout with a tail, and that could lead us back to that 20-day moving average. But the 20-day is where I like it the best, and that's been holding throughout this uptrend. So I'm just going to highlight right here, and then again right over here. These 20-day tests, or almost 20-day tests, have been very good entry points into this uptrending ETF, this uranium ETF. But today's volume is bullish. So if we get the confirmed breakout, I would expect some more short-term strength. But again, if we fail and leave that tail up above the prior high close, then I think it could mark a short-term top, and maybe we get this move back down to the rising 20-day.
Okay, the next one I have is THO. Thor, but they were asking what kind of gap this is. I would look at it as a continuation just because it came off of a rally, but I'd beware right now. Personally, that looks like a descending triangle, and I would expect to break down. PMO top too, so not sure what you think.
Yeah, I really like the stock, but I don't know. I kind of, when I look at gap analysis, I like the fact that it finished strong the day of the heavy volume. So I'm just going to mark this. And this, I believe, is on my strong earnings chart list. I believe I know it's been on there before, and it might have been one of these other moves. But this was a huge gap up, very heavy volume, which I like. But if it loses its recent lows, I think it's got a shot to go back and test this double top breakout that we saw before. So I'm kind of with you. I think it might be just a little too early to jump in. I like the stock. I just think you might get a better price on it. So for me, I would wait, but I do like the stock.
All right. Let's see here. The next one we have is ERJ, Embraer Aircraft.
All right. ERJ, this used to be on my strong earnings chart list, and then it broke down on their last earnings. You can see the heavy volume here. But it is coming up through the 50, and I think it's about to have a pretty significant test. And that test is right here. You can see on heavy volume after the gap down, these tails and this one candle body up here show that we really struggled to get above about 2060 or 2065. I think that's going to be the first test. If I owned it from a short-term perspective, I would sell it. If we do get through 2060, the next level is going to be the top of that gap resistance. There were a lot of sellers from this level. So I would suspect somewhere in this zone, we're going to run into some difficulty. The good news for this stock is that its recent closes here, the lower closes were accompanied by higher MACD. So we had a positive divergence, which suggests a 50-day test. Beware, number one, an intraday move above the 50 that fails to hold on the close, or a move above the 50, but a reversal where we go back down below the 50. Because a lot of times you get the positive divergence, you simply get up to that center line and roll back over. So this is going to be the area of make it or break it for ERJ.
All right, let's see. The next one I have is ITA.
All right, ITA, I like the fact that it went back and got its 50-day test after a negative divergence. So what I, again, would be looking for is this 50-day test and this MACD center lines reset because of this negative divergence right here. So you got higher prices, lower MACD. And by the way, look at that dark cloud cover on the top. I always talk about, when you get the breakout, you never know if this MACD is going to turn back up again. So you don't want to be too premature. But when I see a reversing candle and a failure to hold the breakout, that to me suggests a top. And it did turn out to be the top. We went back to the 50. We got that center line reset. I think this stock is just starting to move back to the upside again. This is the Aerospace and Defense ETF. I like it. I expect you're going to see higher prices.
Okay, let's see here. The next one is OSTK.
All right, Overstock. They were in the news this morning. I'm trying to think. It may have been an upgrade. I'm not positive, but I want to say it was an upgrade this morning. But the stock is definitely having a great move. And again, here's a situation where you've been very overbought for the last few months, pulled back. Yeah, this is scary. Look at all this volume. But we get a 50-day test. We get it in the middle of gap support. So let me just update these areas of support. That's why on these other ones I've been looking at, this is what trying to decide, okay, is it going to turn at the top? Is it going to go all the way to the bottom? Is it going to turn somewhere in the middle? It's really hard to determine where. But that trading range was key support, and now we have gapped up on heavy volume out of it back to the upside. I expect we're going to make another run up for that $65 level.
Okay. The last one, number 10, is WM Waste Management. Quite a breakout.
Yeah, I like the space, and I agree. I don't like today's candle right now, so let's see how this finishes today. But we've been going up almost every day for about 2 weeks, and right now, we have a black candle. Now, it could turn out that we finish strong by this afternoon. That black candle could be gone. But if we finish with that black candle, I'd be looking for a short-term pullback. And so what I would be doing is looking at this and just knowing that I want to watch. And if it does continue to print that black candle today, and I'd be looking then for a pullback closer to the 20-day, which also, by the way, coincides with some price support. Here was the prior highs. Here was your breakout on volume. So at some point, a pullback to $82 would just be a normal back test of a breakout level. And that also would test this rising 20-day moving average. So I like the stock, but I wouldn't buy it at this price. I like it better down around 82, 82 and a half.
All right. That's 10 in almost 10.
Almost. Almost.
All
Great.
right.
So I know we've got the market update, and then you've got your decision point. So I'm going to let you take it away.
All right. You can go take a nap, I guess.
I'm not going to do that, but appreciate it.
Yeah, there's always stuff in the chat room. So, all right. So I'm going to get us started on our final market update. All right. So here is our candle glance just to see what's been going on since we've been on air. And you can see we had a nice bounce on the Dow and on the S&P off of yesterday's close, and we are now starting to shoot back up. The Dow has not hit its intraday high, but we can see the S&P 500 has busted its intraday high and does appear to be going higher. Of course, NASDAQ having very little problem rallying right now. And we can see Russell 2000. Small caps are definitely struggling right now. We've got a double top forming, and we're moving down toward yesterday's close. So it is still positive, but falling. And Wilshire 5000 looking good, broke through its intraday high and does appear to be continuing higher. Treasury yields are rising, currently reading at 23.80. UUP had a difficult morning, but it is coming back to life. I will be talking about UUP shortly in the Decision Point report. And we can see that commodities are on the upside. USO, which was on a really good run, has pulled back right now. And gold is on its way down. So we're starting to finally see that inverse relationship come together again for UUP and gold. And the VIX is falling further. So investors not feeling too nervous at this time. Declines are leading advances. Let's move and just take a peek at some of our scooter movers here. So in our top 10, First Solar, Urban Outfitters, Michael Kors, they've been doing the best at this point, and that's why they are at the top of the stock chart's technical ranking. Top up, who are the big movers today? We can see that SM Energy is doing quite well. Does appear to be forming a flag right now, so that could be very interesting. Nilsey at this point is, had a breakout. You can see through that declining tops trend line and setting up fairly nicely. Top down, who is having the biggest problems today as far as scooter rank? And we can see a gap down on Eon, not looking so great, but it is sitting on some support, it looks like, from earlier last week. And we can see MAC is also having some struggles, but it's basically sitting in the middle of a trading range. And that's all I have for our final market update. Was there anything there you wanted to comment on, Tom, or are we good to go?
Actually, before you go into the decision point update, I do want to just show everyone one thing I'd written about in my blog. And you mentioned that the Russell 2000 was underperforming, and that's what kind of jogged my memory here. But I wrote in my blog article from this morning under historical tendencies, I always try to put some interesting fact in there. And in here, I was talking about the Russell 2000 and the fact that it tends to rise during the month of December. But it's not like every day is created equal in the month of December when it comes to small cap stocks. And in fact, I went back since 1987 and I broke down performance. First of all, December as a whole is by far the best month of the year for small caps. For the Russell 2000, I think the average annualized return is like 35%, which is probably double any other month of the year. So December is very good to small caps. But when you break it down, look at and right here I've got it highlighted, look at the breakdown between December 1st to the 15th and December 16th to the 31st. If you go back the last 3 decades and put all the December 1st to December 15th periods together, the Russell 2000 has actually lost value, down 3.27%. But when we get past the middle of December and we start heading into that Santa Claus rally, the Russell 2000 small caps has said in the past, you want to be in small caps. And that annualized return of 74.88% from December 16th to the 31st, to me, shouts that you want to be in small caps and have some exposure. Now, I want to make sure everyone understands this. I'm not saying that I expect the Russell 2000 to go up 74% in the latter half of December. What this is an annualized return. So if you take this and divide it by 24, because there's 12 months, so it'd be 24 half months. You have to divide this by 24. And what this is telling you is that roughly the Russell 2000 average is going up about 3% from December 16th to the 31st over the past 30 years. So anyway, I just wanted to point that out because I thought it was really interesting. And I went in further to look at the only years that this didn't hold true over the last 30. And these are the 4 years that went the other way. And you can see very minuscule losses in those 4 years. So the tendency, without question, I mean, we can't provide any guarantees what's going to happen in the future. But based on the last 30 years, there is a lot of buying that seasonally takes place in the second half of December in small caps. And, knowing that these are the biggest losses that we've had over the last 30 years tells me it's probably something that I at least want to consider in my trading or investing strategy. So I just wanted to point that out before you get into the decision point.
Oh, I appreciate that. It gives my voice a rest, which is definitely having some issues today. I think it's the 0% humidity in the air right now. So let's see. I'm going to go ahead and get started with our decision point report. Oh, not there. Okay, here we go. All right, first thing I wanted to show you at this point, let me go back over here to Safari. Here is the blogs tab. And I did want to point out, and Tom talked about his blog as well. If you go down here, this is where you can pick all of the blogs we have. We have 3 members only blogs, Martin Pring and John Murphy and Arthur Hill. So not a surprise. These guys are the tech titans of the business. But I wanted to point out our DecisionPoint blog because Carl on Friday does his weekly wrap, which is going to cover all of the indicators I'm getting ready to show you. I'm going to expand on a few things, but he also writes about the big 4, USO, UUP, GLD, and TLT. So he also talked a little bit about the Bitcoin bubble. So I think I know a lot of people ask about Bitcoin, and there you go. So he did write a nice article on all of that. So I wanted to point that out before I get into the report. So we use the SPY for our trend model signals. And anybody who sat in on Friday should be familiar with the trend models. So this is the SPY. And currently, as you can see, given the fact that we've got the faster EMAs on top and the slowest on the bottom, we're on buy signals in all 3 time frames as far as the trend model on the SPY. And a PMO buy signal is also into effect. Like the fact that we're seeing it reach above its previous top. But I am a little concerned because I think you could make a case for a rising wedge, and these are bearish patterns. So we could see a bit of a pullback here, but the rising bottoms trend line is holding up pretty pretty good. So I'm not overly worried, especially when you see that PMO starting to finally confirm this rally. And yes, the rally in right now. So I'm going to show you some of our indicator charts. Although actually I'm going to show you the NASDAQ first. Mainly because, we've had this up and down going on. And what I'm a little concerned about when I look at and I say a little because it doesn't look like it's really coming to fruition, but I really think you could make a case for a head and shoulders building right now on the NASDAQ 100 after such a long rally. That could be an issue. And if you look at the height of this pattern, if it were to execute, it would pretty much bring you right back down to this area of very strong support. So I'm a little bit nervous about that. But if we see this rally get up and get above those intraday all-time highs on the NASDAQ 100, then of course the pattern is busted and I wouldn't be getting too concerned. I think the PMO it is a little bit encouraging. We are on a sell signal, and that's the only PMO sell signal, I believe, right now on the DP scoreboards. But we can see the PMO turning up. We've had this rally, and it does seem to be affecting momentum on the PMO. So, it is sitting in the middle. I wish I could give you a definitive answer of what's going on, but I just wanted to bring it to your attention that in tech, we could be setting up for something not so good, like a correction. Imagine that. A correction. I've forgotten what they look like. S&P 100, I wanted to show you the fact that I'm seeing an ascending triangle, which is a bullish pattern. And look at the difference in the PMO from the NASDAQ 100 to the S&P 100. And again, you're seeing PMO readings now above the previous tops. So I think that's positive for the S&P 100. And, when you see such, very positive looks on the Dow, on the OEX, the S&P, and then you have this problem showing up on the NASDAQ 100, normally I would say, if everything else is doing well, then, the NASDAQ should follow suit. But we've seen this, the bifurcated market come and go with technology not really following along. And I think it's encouraging. We are seeing that rally, but I did want to point out that possible head and shoulders. So let's look at our ultra short-term indicators right now, climactic indicators, as we call them. These are pretty much your day trader type of indicators. So, intermediate and long-term traders, you can kind of close your ears if you'd like. But what I like about this chart, these indicators, and they're simple, they're, out there, everybody's familiar with them. But I like the fact that when I look at them, you can get these climactic readings, and the next day is usually pretty much on target for what you would expect to see. So in this case, right now, I think, we came in on Friday with some pretty climactic readings here on the advanced decline, the advances and declines. And I think that was important because we also saw a test of overhead resistance on that Bollinger Band for the VIX. And again, I do reverse, and here is why, because I think tops on the VIX, for me, are really low readings. That means overbought. So that's why I reverse it, because if you've got a lot of bullish activity going on there, you're getting overbought. And so that's how I look at these, and that's why I invert it. So currently we are starting to test the top of the Bollinger Band. We've gotten some of the climactic bullish readings. So I'm saying it's looking a little bit too bullish, and I would expect a pullback, a small move back down, probably in the next day or two. So it doesn't tell us how deep it will be and all of that, but we've been on a rally, so not surprised. But I did point out a few other times where we've had some tops on the VIX, and we've had climactic readings on the advances and declines. And I think it's pretty clear you get a little bit of a decline here. It just turned out to be some consolidation, but you can see a 1 day, 2 day decline here. This was one that didn't quite come together, but if you look, we didn't have overly positive bullish readings. We were looking more at an exhaustion possibly. All right, let's move to our short-term indicators. And I consider these your days to a week or two indicators. Very positive right now. We'd seen a significant drop in a very short time on these short-term indicators. I like it because that brings it out of overbought and just sets you right up for that bounce off of the zero line, tells you there's some internal strength going on here. And if you look over here as well, we did get a top on our intermediate term indicators, and I'm going to show you that chart next. But they're also bottoming right around the same time as the short-term indicators. So I think that is positive, and it speaks to, even though we may look at a pullback, a small decline over the next day or two, I would say past that, we should look for all-time highs to be tested and happen again. Let's look at those intermediate term indicators on their own chart. And here we go. What I've been watching, of course, are the bottoms on these indicators since we just recently got one. I know some might have been nervous who follow this chart closely when we got that top on these intermediate term indicators. But the best thing you can do is watch for a negative crossover. At that point, to me, then you need to worry. Okay, but we hadn't had it yet. You should expect a little bit of twitching. You can see it right here. You're going to see some twitching on these indicators. So as long as I'm not getting that negative crossover, I don't get myself too worked up or worried. So they are heading up again above their signal line. So I think that is definitely positive in the intermediate term, meaning a week to a few weeks is sort of how I look at possibly weeks to a month for intermediate term. All right, let me go through the big four quickly. And interestingly, I don't know if you read the article on my bull bear market rules and head and shoulders patterns, but I had pointed out that we were looking at a possible reverse head and shoulders on UUP. However, it did not come to fruition. And the main thing that you should consider, of course, is that if it's in a bear market, your positive, your bullish chart patterns aren't necessarily going to execute properly. And I think this was a good example. I mean, look how far below the 50, the 50-day is below the 200-day EMA. So now what I'm starting to look at is a regular head and shoulders, if you want to call it that. And it's set up below the 200-day EMA. We know we're in a bear market situation here for UUP. This isn't a right shoulder yet. It's not a head and shoulders pattern until it actually executes. So this is just sort of an alert that, we might be looking at a head and shoulders. However, as I scroll down, the PMO is just about ready to give us a buy signal. And you can see in the thumbnail here, we're almost about ready to get an intermediate term trend model buy signal. So I'll be watching very closely to see if this rally on the dollar can continue up and start competing with the head, kind of get rid of that head and shoulders pattern that's trying to form. For gold, which typically travels the opposite way that you see the dollar travel, and I think this also gives you some interesting information when you compare a possible head and shoulders on UUP, which is bearish, and a breakdown on gold, which tells me I would expect gold to move a bit lower. Look at the PMOs on a sell signal. We got that 20-day EMA that failed to give us that positive crossover buy signal for the IT trend model. Gold just not looking good. I have not been bullish gold for a while, and I was certainly thinking about changing that as we had this rally. But I just, looking at the PMO, I just didn't, and then the fact that 20 couldn't get above the 50, I just couldn't get bullish. Now we've got a serious breakdown on our hands. And what I would look at, and then, the scooter, we're not seeing enough in the way of discount rates, though. The discounts on the gold trust, I would like to see those get higher. That would tell us we might be looking at a bottom. But right now, I wouldn't be considering that. I'm going to go ahead and add the volume by price bars, because whenever I see a big long dip till the next support area, I kind of want to see where we are as far as volume of trading. And, right now we're in a zone where we've had a lot of volume at that price level, and we're sitting right in the middle of it. So I would say this is kind of the 1240 area, maybe 1235 is going to be important. If we see that drop, which the PMO is telling us to expect, then we will be looking at, the 1220 level over here. But more than likely, you're looking at very strong support here all the way down to 1200. So I'm bearish gold, and I am bullish on UUP, even though we are seeing a possible head and shoulders in the shorter term. But, looking at this ugly gold chart, it's hard to imagine that the dollar would really suffer. It would really be suffering. All right. When we look at oil, again, I'm starting to see a possible head and shoulders. I don't know if I have head and shoulders on the brain right now, but that would be a pretty steep rising neckline on that. And if we get the breakout here on USO, which honestly, I kind of expect to see, given the very strong scooter on USO and seeing the PMO making its attempt at a dip. So I think we're pretty good. We should see that breakout. Now, whether we can get above previous overhead resistance here at about 1180, that will remain to be seen. And I would want to look at that PMO and the OBV more closely when we get to that point. And when you look at the price of oil itself, you can definitely see there's certainly room for it to move up to hit overhead resistance at about 59. Final, with 1024 left, I'm doing really well, I think. Okay. TLT. So again, when I did my bull bear market rules article, I did use TLT as my other example because it is in a bull market. And it looks like, it had looked like we were setting up for a very large head and shoulders on that. But, we got this right, quote unquote, right shoulder, and it started to really compete with the head. So, and we are in such a bull market when we look at TLT. So I'm not really looking for that Head and Shoulders to execute. However, when I look at the PMO, we're starting to see it top, but it is rising. Our tops are rising with price tops. Bottoms are rising. So, and we're not really that overbought as far as the PMO. So I think there are some not so great things sitting here, but I'm not really sold on a Head and Shoulders pattern developing right now on TLT, just because we really saw the quote unquote what would have been a right shoulder competing too closely with the head. I think if you read Bulkowski, I think this is another form of a Head and Shoulders that he considers, but I don't see it. If anything, I see this nice rounded bottom here in the intermediate term. We'll have to see if we can get that breakout above 128, 129. And that's all I have for my DecisionPoint report. For more information, I will be writing DP alert on, probably today and on Wednesday. So you can look for that anytime you see DP alert heading in my title. That means you're going to see all these charts and I'm going to talk about them. So that's what you want to look for. And with that, Tom, I'm going to give my voice a break and we can wrap this thing up.
Okay, sounds good. A couple questions came in. I was looking back through the chat while you were going over the DP update. Mm-hmm. And one question that came in was, why are there gap ups and gap downs at the opening bell? And I noticed there were some comments responding to the question, and they were very good answers. Basically, news events obviously are the one thing that is the big critical reason for gap ups and gap downs, especially meaningful gap ups and gap downs. And I'm talking about heavy volume moves in one direction or the other. So a lot of times big announcements like earnings or, buybacks, raising dividends, could be warnings. There could be a lot of different things, events that are specific to a company. But a lot of times it's just the overall market itself. So if you're looking at the market in the morning and you see the futures are up, and maybe if you look at the 10-year Treasury yield and you see yields are rising, many financial stocks will move up at the open based on something like that. There's just a host of reasons. But then that went on, and I think there was another question that asked, how can indicators be relied upon when you have so much manipulation in the market? Well, I try to use the manipulation in the market to my benefit. I try to anticipate what those who commit that manipulation are trying to do. For instance, when you get a big gap up, waiting and allowing a stock to come back down, say to a key price support level or a moving average, I think is critical. I think if you're buying and just chasing things, I think that can be a big problem. I believe psychology plays a huge role in trading. I actually took a psychology course many years ago. It's probably, my goodness, probably 15 years ago, talking about humans and how we tend to want to be right when we first enter a trade. And that might sound kind of strange, but you want to buy stocks. It's our nature to buy stocks that are going up because they've been going up. Everybody's talking about them. There's a lot of bullish feeling about them, and you get in and you just feel good. And then 2 weeks later, the stock's down 10%, and you're like, well, what happened? And, it's the market. The market goes up and it goes down. It's not just us trading, but you've got another force out there in terms of market makers. You've got companies like, the Merrill Lynches of the world and Morgan Stanley and Goldman Sachs. And then you've got pension funds. You got, and market makers are trying to take orders from pension funds that want to buy millions of shares of stocks. And their obligation is to try and get the best price they can for their clients. And a lot of times it's at the expense of you and me. So, when a stock's going up and there's heavy volume and you're chasing, a lot of times these market makers are on the other side of the trade. Everybody wants to buy, and their job is to provide liquidity. So they end up moving onto the short side. Well, if market makers are on the short side, at some point stock prices are going to come back down. Demand is going to slow, and when demand slows, then you're going to start to see more volume, more things picking up on the sell side and going to pull back to key support levels. So my strategy, and I'm not saying my strategy is the right strategy or the only strategy, but I don't like the manipulation. I try to take advantage of it. And so after I get stocks that gap up and show great characteristics, we get those pullbacks to key support levels. And I think that can be a great way to play it. But anyhow, we are running a little bit over. Any final thoughts on today's action, Aaron?
Oh, well, like I said, I think I'm really interested in finding out what's going to happen with the dollar. That'll give me a better look at what's happening with gold and if we should expect no support for gold. So,
okay. Well, I'm actually bullish given the volatility index continuing. It's moved to the downside. This is the fourth straight day, actually fifth straight day that we have seen the VIX move down, and it is back down to 9.5. And historians of the market know that the VIX at 9.5 has not typically been where we are when a bear market starts. So I think we are still in the midst of a raging bull market. And even though in the short term we may see pullbacks, I think based on what we're seeing in terms of expected volatility, we've got more gains in the days, weeks, and months ahead. But we'll continue to monitor that and keep reporting different things as they show up. But for now, I feel pretty bullish about the market. A couple of quick announcements. I'll be out the next 2 days. Greg Schnell will be here tomorrow with Aaron. So you'll get Greg back in here again, which is awesome. And then on Wednesday, special guest Arthur Hill comes back to join us again. So Arthur will be here with Aaron, and I'm sure he will be able to give you his thoughts on the price action that's been taking place here in the U.S. markets, the various sectors, and what he's been looking at the market. So make sure you tune in for that. And on Friday, I will be doing a segment on price support and resistance. And I talked about that several times during today's show, but it'll be specifically designed to just point out different areas on a chart where you can look for possibly reversing action. I think that's really important in trying to move away from all this manipulation. So I think that Friday session will be a really big one. So hopefully you can tune in. I want to thank everybody for joining us today. Really appreciate your support. Please remember to complete the exit or complete the survey as you exit. I think everyone will probably complete the exit. That won't be a problem. But if you could complete the survey as you exit, that would be awesome. We love to get your feedback on the show, and also any suggestions that you have for future shows. We'd love to hear that as well. As a reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everyone. We will see you back here tomorrow. Happy trading.